This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
In the last lecture, if you remember, I set up that table to try and explain what's going on. We looked at the original budget profit. To make sense of our comparisons, we then flexed the budget and compared our actual results with the flex budget. Materials, what did we actually spend? What should we have spent for our level of production? And we can look at the differences all the way through, revenue, materials and so on. These differences are the variances. The word variance means difference. But I did say that the real work is analysing them. We know we overspent, particularly the production costs, we know we overspent on materials, but we need to look at why. Did we use too much or did we pay too much per kilo? So that's what I'm going to go through now, one by one, looking at those variances, which we know in total, but analysing why. Now, people show the workings in different ways. That's entirely up to you. There's only one answer. My answers will be correct. But show your workings any way you like. I don't know how you may have been taught it before. The one thing I would suggest, it's up to you. Some people just learn what you might call formulae. They learn a rule. And I think that's dangerous. If all you do is learn a rule without really understanding, the danger is in the middle of an exam you forget the rule and end up with a stupid answer. If you understand what you're doing, then it's not really much to learn, you know. So I think it's worth taking the trouble, but that's entirely up to you. But let's go through them anyway, one by one. The cost variances, first of all, materials. If you look back at the question, on the cost card, for every unit, we should be using 4 kilos, and we should be paying $4.50 per kilo. And if either of those two figures end up being different, then the cost per unit will be different. And so we're going to look at the two separately. We're going to look and see, well, did we use 4 kilos a unit or not? And separately, did we pay $4.50 a kilo or not? So look at the two separately. The first one I'll look at is the $4.50. Forget whether we used too much or too little. Did we pay $4.50 a kilo or didn't we? And we call this the expenditure variance. And to check whether I spent $4.50 a kilo or not, we take what we actually bought which was what? Look at the question. If you look at the actual results, we actually bought 35,464 kilos. And for the minute, I don't care whether that's more or less than it should have been. That's what we bought. And we compare what we actually paid for it. Well, the actual cost, it's told us, is 163,455. So that's what we paid for them. Let's check what we should have paid, and therefore did we pay more or less. We compare it with the actual purchases again at the standard cost. It was 35,464 kilos we bought. We should have paid from the cost card $4.50 per kilo. And so we should have paid 35,464 times $4.50. We should have paid 159,588. Sorry, I'm just checking my own arithmetic. Yes. So that's what we should have paid. Have we paid the right price? we actually paid more. And so how much extra were we paying? 163,455 minus 159,588, 3,867. And is it adverse or favourable? I hope fairly clearly, since here we spent more in total than we should have done. If we spend more, it results in less profit. It's adverse. So, there's your rule. Again, learn it whichever way you want. But always, actual purchases compare what we spent with what we should have spent. All right, that's dealt with that, and we know we did pay more than $4.50. But the other thing we need to look at is even if we had paid the right price, so forget now we overpaid, even if we had paid $4.50, did we use the right amount? It should have been 4 kilos a unit. And so we call this the materials usage variance. And to check whether we used more or less than we should have done, we compare how much we actually used in kilos. What did we actually use? We used 35,464. We compare it with what we should have used for our actual production. Standard usage for the actual production. Well, how many units did we produce? We actually produced, keep checking the question, we produced 8,900 units. How many kilos should we have used? It should have been 4 kilos per unit. And so we should have used 35,600. And so in kilos, did we use more or less? Well, in kilos, we actually used a bit less than we would have expected. So 35,600 minus 35,464, 136 kilos. And if everything else had been perfect, if we had paid the right price per kilo, using less material will have saved us money. And how much would it have saved us? At standard cost per kilo of $4.50, using 136 less kilos would have saved us 612. It would have saved us money, appreciate, use less material, on its own we'd spend less, therefore it would increase the profit. It's favourable. There we are. Out of interest, but you won't be in a position to do this in the exam, you won't have time, although you've got to be able to go straight into the analysis, those two variances, the two together, 3,867 adverse minus 6,112 favourable, the two together net off to 3,255 adverse. And although again you will not have done what we did in the previous lecture in the exam, it should agree. 3,255 adverse, it does. We've analysed the overspend into the two separate reasons. And it would appear, we'll chat a bit more about interpreting them later, but it would appear, whatever the reason, that the person in charge of buying material for some reason has overspent, and we want to know what went wrong. The person responsible for using it, the production manager perhaps, seems to have done quite well. We've used less material, a bit less. Perhaps we've managed to cut down the waste we expected. Anyway, there we are. There's the materials. In a similar way, let's go through and do all of them. So the next one, let's look at labour. Again, from the cost card, we should be working 5 hours for every unit, and we should be paying the workers $5 per hour. So each unit should cost 25. And again, similar sort of way to materials, we're going to look at the two bits separately. We're going to check, did we pay them $5 an hour? And separately, even if we had paid them $5 an hour, did they actually work for 5 hours a unit? As you'll see, I will throw one extra little bit in, which is special for labour. However, let's make a start. First of all, let's check, did we spend $5 per hour or not? And we call this the labour rate of pay variance. And it's a bit like materials in that we say, rightly or wrongly, how many hours did we pay for? And we check how much we paid and how much should we have paid. So we take the actual hours paid and if you look at the question, it says we paid for 45,400 hours. Don't worry about the other figure for the minute. Rightly or wrongly, we paid 45,400 hours. And we say, well, how much did we actually pay for it? The actual payment in total was 224,515. And we compare that with what we should have paid. So again, the actual hours we paid for were 45,400. At standard cost, well, we should have paid, what was it, $5 an hour. And so we should have spent 227,000. And so compare the two here, we spent less than we would have expected for those hours. We've saved $2,485. And on that alone, we are saving money. If we're saving money on that alone, it would have increased the profit. So that's a favourable variance. So very like materials, you see, once you've learnt it, it's the same for all of them. Materials, what did we use? Compare what we paid, what we should have paid. Labour, rate of pay. What did we buy? How many hours did we pay for? What did we pay? What should we have paid? All right, that's fine. So let's now forget the $5. You know, let's assume, forget that problem. We've dealt with it. But even if we had paid $5 an hour, was this 45,400 hours correct? And here we have one little extra bit. If you look at the question, although we paid 45,400 hours, they only actually worked 44,100 hours. So we've paid them for a few hours when they weren't actually doing anything. You know, maybe it was just they turned up for work late and didn't work a full day or something, in which case we need to sort it out. Or maybe a machine broke down and we had to carry on paying them even though they weren't actually working at the time. But for whatever reason, we've paid them for hours when they did no work. And we need to check, I mean, that's going to cost us money, surely. If ever you pay people for hours when they don't work, it's costing us. We call this idle time. Idle time is when you're doing nothing but you're getting paid. And this is actually a very easy one because, if you've understood what I've said so far, it's almost automatic. We say, well, how many we want to know how much money we were wasting. You compare the actual hours paid in hours. We paid 45,400. Compare it with the actual hours they worked. 44,100. And the difference, of course, are the hours when they weren't actually doing anything. So there were 1,300 hours idle. And on its own, how much is that costing us to pay when they're not working? Remember, we've dealt with the rate of pay, so I'm no longer interested there. We cost it at standard cost per hour at $5. And so 1,300 hours doing nothing at $5 an hour, something again, is costing us 6,500. And I hope very obviously this is adverse. Always, if you're paying for hours when they do nothing, we're losing money, it can mean less profit. Not quite there yet though, because having dealt with both of those, the last thing we need to check is, of course, those hours they worked. They were supposed to work from the cost card 5 hours a unit. We need to check, did they take longer or were they quicker than the 5 hours a unit? And we call this the efficiency variance. For the efficiency variance, we compare the hours they actually worked which was 44,100, and to see whether they were more or less efficient, whether they took too long or they were faster, we compare it with the hours they should have worked, the standard hours for the actual production. How many units did we produce? Be careful. In a hurry, you can easily get the wrong figure. But the actual production was 8,900 units. How many hours should each unit have taken? From the cost card, it should have been 5 hours. And therefore, they should have taken 8,900 times 5. They should have taken 44,500. So here they actually did well. They should have taken 44,500. We've saved 400 hours. And if that's the only thing that had gone wrong, how much money would we have saved? We cost it at standard cost per hour at $5. It's 2,000. Of course, it could be either way, but here, because they have worked faster, they've been more efficient, it's favourable. And although I'm not going to keep doing this because you wouldn't be in a position to check in the exam, you know, in the exam, calculate the efficiency variance, right? You either know the rule or you don't, and out it comes. But because of what we did earlier, the total of those three is what? It was 6,500 adverse, less 2,485 favourable, the rate of pay, less 2,000 favourable, the efficiency. Overall, it's 2,015 adverse. And is that what we got in total in the last lecture? Yes, there we are, 2,015 adverse for labour. But apart from the fact that, you know, we are just analysing into the various reasons, I say again, you won't be in a position to check them like that in the exam. You won't have done those earlier statements. All right, so we've done materials, we've done labour. Let's do the last of the variable costs, the variable overheads. And same sort of idea as the others, but look at the analysis on the cost card. Although we were expecting to spend $10 a unit, they're actually charging them on a labour hour rate. It's not a coincidence. They've said, oh, we're working 5 hours of labour, we should be paying labour $5 an hour. For variable overheads, well, there's 5 hours of work, but the variable overheads are being charged at $2 per hour. So it's being charged on a labour hour basis. And so, in a similar way to the others, we're going to look at the two separately. Did we pay $2 an hour? And did we work 5 hours on each unit? Well, although it's very similar to what we've just done on labour, there's one rather important difference. We're going to look at the expenditure variance first, the $2. So expenditure variance. And in a rather similar way to materials expenditure and to labour rate, we're going to compare what we spent on variable overheads as against what we should have spent at $2 an hour for the actual hours we used. However, we do make one assumption always in doing this. The 5 hours is labour hours. We already knew that labour, that we paid for 45,400 and they only worked 44,100. Well, for the labour variance, we were paying for that idle time. With overheads, we assume that we only have overheads while they're actually working. While they're idle, although we may be paying the workers, we assume there are no overheads being incurred. So to calculate the expenditure variance, we take the actual hours worked which is how many? 44,100? At the actual cost. So the actual amount we spent was 224,515. No, it wasn't. That's labour. It was 87,348. As what we actually paid for the hours they worked, we compare it with actual hours worked at standard cost. So 44,100 hours was what they worked. That's how many hours of overheads we were using. The overhead should have been incurred at $2 an hour, so 88,200. The difference, the variance, 88,200 minus 87,348 is 852. And we were paying a bit less than we expected. It's therefore a favourable variance. Today's expenditure, for reasons I've already said, there's no idle time variance when it comes to variable overheads. But the other bit, we do need to check, did they take 5 hours for each unit or not? And this is the efficiency variance. And here, it's exactly the same workings as for the labour efficiency for the same reasons. We want to check, did they take 5 hours a unit or not? So we take the actual hours worked remember, it's related to labour, so it's 44,100. We compare it with how many hours this should have worked, so the standard hours for the actual production. Uh, 8,900 units produced. It should have been 5 hours a unit, which is 44,500. And therefore, they did work faster. We saved 400 hours. We cost it at standard cost per hour, which for variable overheads is $2. They've worked faster. We've saved money. It's therefore favourable. And there we are. The two together is 1652. I'm not going to wind back, but that's what we had as the total variance in the last lecture. But efficiency, it's exactly the same for labour and variable. For labour, it was 400 hours at standard cost of $5. For variable overheads, it's 400 hours at a standard cost of $2. Okay, well there are all our marginal cost, variable cost variances. We've two more to look at, which won't take long, but I will have a break. We'll deal with them in the next lecture.